The state of the markets and why we had a recent sell-off. I think there are three vectors on both the positive and the negative side, and we want to talk about those as far as markets are concerned. Let's start with the negatives and the reason why we had a sell-off. I think number one, inflation, number two, deficits, and number three, AI hot air. And on the good side, we have real innovation on the AI front. We have real innovation in aerospace, and we have real innovation in energy. So innovation is just another word for productivity gains, and productivity gains actually mean that things get more affordable, more available, and therefore that is deflationary and helps a little bit mitigate the positive side. But I think the market will struggle between those two in the next coming quarters. So it's not going to be an easy ride up like maybe some are hoping, given the potential and us being here situated in Silicon Valley. Sometimes we forget that there's also negatives, of course, in the world. It's not just all Goldilocks positive innovation technology. So we kind of have to weigh that, and it's going to be these two forces fighting each other. Now, as investors, we don't just hope. I mean, it's our business to, actually, I shouldn't say that. We have decided to put our capital to work, and that means that we think that the innovation forces will prevail. But it's also worth noticing that they're not always going to be linear. And I think the most important thing for us as investors is always to also have the understanding of why something is not working. And right now the markets have sold off, particularly our stocks. We are down 10% for the year. So that is, and it's worth understanding for why that's happening. This is not even on podcast. It's June 11, 2026. This is Karim Delco. For the year, we're down 10%. The market's up 7%. We're underperforming by 17%. Our main drawdown comes from Tesla, and the company is not doing well right now as a stock because people are awaiting the robotaxi rollout, and the robotaxi rollout is taking much longer than people expected. People were thinking April and May. Now it's June. And that's okay. We're okay with that. We have the product that speaks for itself. There is a general embodied AI technology available, and it's going to be a matter of time until that goes and prevails in the market. We have very high conviction that that will happen. Robotaxi, Cybercab, and later Optimus. We've been working on this for the last couple of weeks, also attending CVPR, interviewing some academics about this. Embodied intelligence, embodied reasoning is the future of robotics, and there's a technology pathway towards that, and we're very excited about that. So this, as far as our portfolio is concerned. Now let's talk about the generals. This is a now general market comment, and I want to start with the negatives. So first we have inflation. Inflation is driven mainly by the war in Iran and energy prices. And even though we have core inflation and non-core inflation, of course, energy prices, they proliferate everything. Oil prices are in every product. Everything is more expensive because of the war in Iran, which is an unnecessary war, an un-winnable war, and therefore a very scary, actually, situation. I think it's worth reminding ourselves that this is actually happening. I think, second, there's permanent deficits, which is probably long-term a much bigger problem than the war, even though I don't want to diminish the war. But I think long-term, this culture of permanent deficits, which is being ingrained in our psyche as we speak, is going to bring down our civilization. I mean, that's how bad this is. You can't spend more than you make, even as a government. Long-term, that's not going to work. The Roman Empire had to endure this. Many other empires had to endure this. And so will also I call it the Western Empire. So it's not just the U.S., it's Europe, it's Japan. So all these post-World War II Western civilizations, which have created enormous amounts of wealth and have done extremely well for their citizens, they will destroy themselves with this permanent deficit spending. It's being underpinned by what's called MMT, modern monetary theory, which is an absurd name for an absurd theory. I don't even want to go into that conversation. There's a good discussion on the Human Action podcast, links in the show notes for people who are interested in a more thorough understanding of what this MMT means and why it's so dangerous. I just want to say a few things about this. I think there is a permanent, established elite of people in the Western world, which is basically a pseudo-socialist um, crowd. And what I mean with that is they have taken the reins of finance into their hands, and they've decided to, because they can't raise taxes to cover deficits, to just do this with money printing. And the bad thing about this is not just that they're financing permanent deficits with money printing. The bad thing is that they're not really investing. Like if they were investing, let's say in China, there is money printing too, but there's a lot more investing going on. Investing, like if we actually built better roads, better, satellites, better, if we built a better aerospace system, better defense systems, that's not the end of the world, even though the government shouldn't be involved in all these things at the scale that it is involved now. But the main purpose of deficit spending in the Western world is actually just redistributive spending. In other words, that is socialism. So it's trying to equitize the outcomes by just printing money and giving it to people who haven't been successful in the game of capitalism. And that is the problem. And therefore, that is driving inflation actually a lot more. It's permanent inflation because the Iran war, you can say it is a shock, people will readjust, but this permanent deficit spending is permanent inflation. And if you don't believe me, just ask yourself, how much is the house that you want to live in? How much was it 5 years ago? How much was it 10 years ago? And how much is it now? And where do you think it's going to be 5 years from now? Just ask yourself that question. And if you're not happy with owning a house, ask yourself, how much does it cost to educate your child in college? And how much does your healthcare bill? How much is your healthcare bill? So those are the kinds of questions you want to ask yourself if you don't believe that there's permanent inflation, which of course is absurd because there is. So those are the two biggest problems: the war in Iran, and permanent deficit spending. I mentioned the third one, and that is hot air in the AI space. I think there is a lot of hot air. We need a readjustment of expectations. In general, I think the value added by agentic workflows is not as much as people are trying to sell it to the world, and there needs to be a reset for that. And we believe, and this is now the transition into the positives, that actually the value added for real world AI is being underestimated. So there's a kind of a dichotomy in the market right now where we're over indexing on things like cloud code and software and this and that, and under indexing on, for example, self-driving and the future of humanoid robots. Because we believe that the value added, the actual value that is going to be delivered to people, let's say self-driving, transportation cost being slashed by, maybe 50%, if not more, that's going to be very tangible for a lot of people directly versus having agents writing code and replacing people and whatever is going on in the agentic workflow space. Overall has certainly impact. It's not a bad situation, but I think there's too much out there and it needs to readjust a little bit. And that means that particularly companies like Anthropic and OpenAI and then all the infrastructure which is attached to that, the CPUs, the memory, they need to readjust a little bit. So that's on the positive side. I think what I meant, I'm sorry, that was a negative, but the positive as a transition, that we have a lot of innovation coming from real world robotics, and that is actually amazing. And I think what that means is that we have productivity gains in actual labor, and that is, if you think about it, yes, our economy is 80% services, but if we can improve productivity of actual manufacturing and labor by 20-30%, then that is a huge leverage onto services. In other words, if you don't have to hire a cleaning lady to clean your apartment, you can then spend that money on, let's say, a nutritionist or something like that. So there's going to be you're going to free up resources for other services. So that's going to be a huge boost in the economy if Tesla can iterate much faster on the next generation of cybercabs. If Tesla can, if Starship can iterate much faster on their next generations because of real world AI, because of robots that are welding, robots that are agentically constantly working and fixing problems and iterating around problems, then that can have a huge boost for productivity. We've mentioned innovations in aerospace. That is, of course, SpaceX, but others also. I think that is opening up a lot of markets, not just in space, but also in the air on Earth. The overarching theme here is lower cost of transportation. And the last thing is lower cost of energy. I think here we have the proliferation of renewables with batteries, which will overall lower the long-term cost of energy. And lowering cost of energy is absolutely paramount for any kind of economic growth. So those are the three vectors. We have innovation in the real world, we have innovation in aerospace, we have innovation in energy, and that's offsetting the inflation and pressure, permanent deficits of the war in Iran, and like I said, a bit of hot air in AI on the agentic side. So not the real world AI, but the agentic AI or the digital AI. So those are the kinds of vectors, those are the forces that we're seeing right now that are counteracting each other. We're positioned as fully invested, and that, for better or for worse, is the situation right now. So we don't have a lot of dry powder. We have some dry powder left to buy dips and things like that. Overall, we are still very positive on the markets because we believe that the innovative forces will prevail, that there is an underestimation of how much technology will impact the world. But in that context, I think we have to acknowledge also the risks. There's also, for example, a risk with Tesla's adoption of cybercab. It's not a foregone conclusion that it will be a success, but the biggest driver for any kind of Tesla product in the past has always been design and cost, or in other words, if you want to predict what's going to happen, I think it's very difficult to predict the future, but you can always bet on the fact that people want lower cost, higher convenience, better comfort, and that is what cybercab is offering, and in general also what real world AI is offering. Maybe last thing I want to say is just that this concept that the Tesla FSD actually can be transferred to robotics, I think that's particularly now after attending CVPR, I'm more convinced than ever that that is the case, because what the Tesla FSD has solved is spatial reasoning. And spatial reasoning is the fundamental driving force of robotics, the ability to understand depth and understand reasoning, so chain of thought in space. That's what actually FSD is capable of doing, and that's why it's transferable to humanoid robots. Thank you.